What is going on, guys? I hope everyone is doing well today. So I'm glad to be back in those technical Sundays for the month of October. What an interesting time to be trading the Forex market if it's not for the coming US election and the rise of a new wave of COVID-19. So how do we navigate into the market and make money out of those events is what I'm going to explain to you guys in the coming video. So I'm going to explain some chart analysis and both with fundamental and technical analysis. So I hope you like it. Please subscribe to the YouTube channel if you like the video, and feel free to send me any questions in the comment section below. I'm going to be happy to answer them as soon as I can. So without losing any more time, let's dive into the charts. So let's start with Euro USD, which had a pretty decent bearish movement with where we created a new low, a new daily low, which I anticipated in the last Technical Sundays, so the Technical Sundays episode 19. So I was anticipating this bearish movement from Euro USD. If you look at the daily time frame, if we look at the daily, we were clearly losing some momentum here, creating this head and shoulder structure, which usually happen at the end of a trend. And when we break down the head and shoulder neckline here and support, usually that is a confirmation that we are starting a new opposite trend. So if we were into this bullish trend, we will be starting a new downtrend here. And right after this new low being created, it is completely logical to have a retest of the structure here, and so creating our first lower high of the new downtrend. And usually afterward of a lower high, we can expect a new low from the previous low, right? So this is why I'm anticipating here that Euro USD will create eventually in the next week a new low lower than the 1.16 low that we did at the end of September. And I'm going to be looking at as well at the extension 27.2, so 1.15, 500, anywhere around that. And also it is possible that we go as low as 1.14, 500. So around that zone, maybe touch this 200 moving average on a daily level. Those are all key level support, key level potential support if we extend this zone right here, key level potential support, and institutional zone as well. So if we get the big picture of Euro USD, so if we go to the weekly time frame, we can also see that we are at this fourth touch of this monthly trend line here. And if we draw a fib, from the February 2018 low high, February 2018 high to this 2020 low, right? We will be able to see that our 61.8 Fibonacci retracement ratio is also into confluence with the zone of consolidation. So everything lined up. There's a lot of confluence. I really like the setup actually. And to add up something, if you go to the monthly time frame, you're going to be able to see that the 200 moving average actually goes into confluence with all this zone right here. So it is not surprising that we kind of lost some momentum here, creating this head and shoulder, and had this bearish movement, creating a new low. And so this is why I'm going to be anticipating a new downtrend on a daily level with Euro USD. And as well, if you look at the fundamental, right, of this pair, so first of all, the US, the USD is really most likely to appreciate in the coming weeks because of the US election. So usually at every election, I'm going to talk about it further in this video, but at every US election, the US kind of become a safe haven. Okay, so the USD tend to appreciate during time of pre-election, which would help Euro USD to go lower, and the euro is completely too expensive. Even the ECB chairman Christine Lagarde is saying that a too expensive euro right now is really not the best thing to help the economy recover from this crisis. So because of international trade. So if you have a business and you want to do business with Europe, and you go there and their currency is way too expensive, it is not going to be very encouraging, right? So they don't want a too expensive euro right now. And if you compare to the last 2 years, the euro is very, very high. So it is not the best thing for the recovery of the economy. So they might do something as a central bank, maybe probably increases the supply, so print more euro to basically devaluate the currency, which will help this technical setup right here. So I'm going to be looking at either 1.15500 and even 1.14500 as a next target for the coming weeks. And if we look at euro yen, which is basically exactly the same setup, just with the JPY, which is the worldwide safe haven. So that tends to appreciate more in times of uncertainties, which is what is happening right now with the US election. So there's a lot of uncertainties of who is going to win, Trump or Biden. And even with Trump, there's a lot more thing that we cannot predict. So the yen tend to appreciate even more. So the market tends to favor the yen as a safe haven, which will help this euro yen bearish trade even more. So for euro yen, I have a very clear target. So I'm going to be looking at here as a new low to be created as of this week. Okay, and eventually the target of 1.2100 right here is my target for EURJPY. It's a very clear institutional level, and it's the extension 27.2 here. But if we look back in time, we can see that it has been a support and a resistance for as long as almost 2 years. So that would be my target for EURJPY and Euro USD. Another interesting fact is if we look at the DXY, which is the US dollar index, and we study the movement every pre-election in the last, let's say, the last 4 election, right? So if we look at November 2018, when the first term of Barack Obama, when he was elected, the US index was very, very bullish. Help it with the US stock market sell-off, obviously, but still is the same date. Again, afterward, we have November 2012. We had this bullish candle right here. And the first Trump-Clinton pre-election in 2016, we had this bullish movement again. And now we are at the exact same level with the Trump-Biden election. We are at the same level that we were at the Trump-Clinton pre-election. So that's an interesting fact to look at, and that might help the US dollar, the support which was created at the Trump-Clinton pre-election, that might help the US dollar gain even more in the next few weeks as a safe haven during times of pre-election. So now if we look at gold US dollar, which has an opposite correlation with the USD, okay, so if we look at these charts on a daily level, we have completely break down this key level support that we had since the beginning of August 2020. So we completely broke down the support. We are retesting it right now. And if we will be anticipating a strong USD in the next few weeks, that might weigh in on gold, and we might see another bearish movement after this retest of the daily support, which will be pretty logical in my opinion. That's another setup that I'm short right now on gold US dollar. And if we look at the H4 time frame, we place this little trend line, which is what basically I'm going to be monitoring for the beginning of this week. So a complete breakout of this trend line and potentially creating a new low lower than the last low we had at the end of September. So potentially a new low on gold US dollar if the USD keep straightening. And that brings me at the USDCAD charts. So another great trade that I anticipated at the end of August and beginning of September. So USDCAD long if you follow me on Instagram, that was a nice trade. We had a 300, 400 pips bullish movement. Now, last week we had kind of a decent retracement because we rejected this 200 moving average here on a daily level. But I still think that if the US keeps strengthening because of the pre-election in the next 1, 2, 3 weeks, I still think that we can get some new high with USDCAD. And one of the other side of USDCAD is always the price of oil. And if we look at the fact that we are getting into a new COVID-19 wave, most of the countries right now are locking down again. So that might affect the US oil price as well, lower, which will affect negatively the Canadian dollar, which will bring USDCAD higher. So that is why I'm still very bullish on USDCAD right now, and that complete the logic of where we are right now in the market with those two main events that is happening, the pre-election and the new COVID-19 wave.